Assalamualaikum and hi, my name is Ermah binti Abdul Nasir and my metric number is 264838. So today I'm with my fellow members from Group 13. We'll be presenting our group assignment. So without further ado, I will go straight to the introduction. So in choosing the company, we all compare our assigned company in individual assignment. So there are 5 companies, which is Avilian Berhad, APFT, Kamda, Asia Fire Corporation, and Dutch Lady. So among those 5 companies, we choose AFC or Asia Fire Corporation. So before I move to the justification, I want to brief a little bit about AFC. AFC is a holding firm for investment. The company acts as a commission agent and managing service supplier. The company is involved in the production and marketing of stationery products, printed paper, and boards. The company operates in Asia, Europe, and America. And lastly, the company have a subsidiaries companies such as Sichuan Marketing, Aba Marketing, and AFP Composite. So why we choose AFC is because AFC, AFC stood out as a better perform company for the last 5 years financial year. So this can be seen by the company profitability analysis in 2016 to 2020. So significantly, a good margin is differ by sector. However, as a general rule, 10% 10% is considered average, 20% is considered high and good, while 5% is considered poor. For operating profit margin, AFC got a high and good margin. And for operating and net profit margin, the company got average, even though there's a slight reduction, but it's still fall under average. Next is ROA. ROA of 5% is considered sufficient enough. And if we can see in the table, even though there's a slight reduction because of maybe COVID-19, the pandemic, the effect of pandemic, so there's a reduction, but it still shows a strong and good ratio. And lastly, for ROE, FC didn't work well for ROE. However, for the overall profitability analysis, FC relatively better than other companies. And in this task, we want to examine whether AFC will sustain or improve its potential, its company performance through analyzing its financial prospect and valuation. Next is projected income statement. We project income statement for the year of 2021 for AFC by using robust model approach that also known as a quick and dirty approach. Robust model use historical data to forecast future growth. In this statement, we calculate the future based on the gross profit margin, operating profit margin, pre-tax profit margin, and net profit margin from 2016 to 2020 of AFC. We also do a forecasting assumption for the year of 2021. As we can see in the income statement, the forecast assumption is sales growth, we got 53%, gross profit margin, we got 35%, selling general and administrative divided by sales, we got 22%, and lastly, interest expense divided by prior year long-term debt, we got 9%. So that's all from me. Thank you.
Hi, my name is Nur Syami Binti Muhammad Amin. My matric number is 264681. Now I'm going to present about a projected statement of financial position and projected statement of cash flow. This is our projected statement of financial position for 2021. So as you can see, our projected amount of total asset and total liabilities and equity are 265 million. A forecasting balance sheet is a useful tool for business planning in general. For it particular benefits to those individuals responsible for arranging and bringing in additional financing. Other balance sheet component, especially fixed asset, debt and equity, change in response to company policies and management actions, regardless of future sales. So, we calculate the future based on account receivable turnover, inventory turnover, account payable turnover, and capital expenditure from 2016 to 2020. For the cash amount, we minus total liabilities and equity with the total asset so that we could gain a balanced value of cash. The cash value in balance sheet is not necessary in proportion to sales increase. The increase in inventory is likely leads to an increase in outstanding accounts payable. So the next one is projected cash flow. So this is our projected statement of cash flow, and we projected that our net change in cash would be around 163 million in 2021. A projected statement of cash flow is used to evaluate cash inflow and outflow for a business. In this statement, we use income and expenditure from the projected income statement and projected statement of financial position. We calculated the future based on net cash flow from operation, net cash flow from the investing activities, and net cash flow from the financing activities. Moreover, we calculated the net change in cash by adding the three types of net cash flow.
Hi and a very good day to Doctor and everyone. My name is Noakila binti Jamaluddin. My metric number 265660. I will continue to present about evaluating external environment for ASEAN 5 Corporation Berhad. As per current digital development, it has been given opportunity and challenges to this company, with global economic growth have damped opinion by 10.5% through the year, affecting demand for products. However, this company has managed to grow their product through various online platforms by creating attractive marketing. This company will structure their marketing strategy to expand their approach with customers for higher margins. The credit insurance title availability will add further uncertainty to industry competitors. When in a constantly changing market environment, the company navigates the challenges journey. To improve operational efficiency as well as ensure the best quality of its product, the company strives to increase the competitive in the global market. Okay, next. To diversify our recyclable food item, the company is also undergoing diversification in the use of product beyond its traditional filing product supported by their strong financial statement. Intense competition between existing competitors will continue to put price pressure and affect profit margin, even if the industry does not attract many new players. The company has taken steps by controlling costs and adapting better with their customer to maintain this situation. The company also does digital marketing as well as leveraging the potential in e-commerce. Moreover, increased mill operational and production efficiency have utilized machine downtime at paper mills in the third quarter. The problem is overcome with proactive action, among which the company has used solar panels in some of its facilities in Penang and subsequently managed to use up to 25% of the utilized energy. Based on the external environment of the company will be given approximately 20% for them, a rate of discount consider the time value of money that is in line with today's purchasing power soon. In addition to the time frame, the level of risk investor invest or project that can cause volatility in the future cash flow should be considered. That's all from me. I will pass to the next presenter. Thank you.
Hi, my name is Muhammad Faiz bin Muhammad Rahim, metric number 263884. I will explain about equity valuation. So I will touch three of the equity valuation, that is free cash flow model, residual income model, and CAPM, that is capital assets price model. So the free cash flow, we will calculate with the net operating profit after tax minus with capital expenditure, and last minus with dividend payout. So for 2016, we calculate that we will get Ringgit Malaysia 52,680,325 for the year 2016. And then free cash flow is the amount that available from business activities to repay borrower and repay the dividend to the shareholders. So free cash flow model can give the information that how much money that could be generated or to know from investors. And all the free cash flow model from 2016 and 2020 shows that positive cash flow from 2016 and 20, and overall company performance is good and have enough fund to pay. And next is residual income model. So the residual income model we will calculate with net income minus with equity charge. So for calculation for year 2016, we will minus, then we will get Ringgit Malaysia 30,751,408.60. So this show the residual income model. So residual income model we know as resident income model or method of residual income. So the income of the company adjusted for equity expenses. And next is CAPM, that is capital assets price model. Capital asset price model, we will calculate the expected return, and then before that we calculate the common stock. From common stock we calculate total equity minus with retained earnings, and the expected return we calculate with risk-free rate plus with beta times with market risk premium, and the growth we will get the growth rate 0.47%. So the future common stock we will calculate with the initial common stock and times with the growth rate. That's we get the future common stock of 2021 until 2025.
Hello everyone, my name is Wang Jiaxuan. My metric number is 256566. My part is conclusion. In the above report, we did a prospective analysis. First of all, we used the rubbish model method to develop and the project income statement, balance sheet, and the cash flow statement 1 year in advance with the historical data of the recent 5 years. Through 5 years of analysis and projected future growth, we can say that while COVID-19 has affected the company's profit margin, its profitability remains strong. Secondly, for external environment, the marketing strength that the company will build can let us see the bigger profit space of company. So far, the company's product diversification, digital marketing, e-commerce, and factory productivity have been greatly supported by the company. Overall, the benefits from the external environment considerable. Finally, we use the free cash flow model and the residual income model to evaluate the equity. Through the conclusion of the free cash flow model in the past 5 years, it's not difficult to say that the overall performance of cash flow is good, and the company has sufficient fund to pay for all the financing. By calculating the growth rate of 0.47. We can get the equity valuation in the next 5 years. Besides on the able financial outlook and the stock evaluation, it's not difficult to say that Anshan Fly Corporation will maintain and inform its personal and the performance of companies.